Hi there, Anthony McCormack here from Hayman Partners Real Estate with our first monthly market wrap for 2021. First up, we'll have a quick look at 2020 and then cover off on what we think is in store for 2021. There's plenty to get through, so let's get started. 2020 was a momentous year in which Australians endured the largest economic downturn since the 1930s and saw 28 years without a technical recession. Several property market trends have emerged through COVID-19, and some of these trends we are seeing in our local market I will touch on a little bit later. Canberra and Australian property values have been exceptionally resilient throughout 2020. While the initial shock of the pandemic saw a decline of about 2% across the board, values between April and September began to recover with some solid gains in the back end of the year. Canberra as a whole saw an average increase in values of about 7.5%, with only the Northern Territory stronger in terms of growth. Housing values have been supported by a strong mix of regulatory, monetary and fiscal measures which have induced record low interest rates, deferment of mortgage payments by households impacted by COVID-19, as well as several other grants and concessions available for owner-occupier purchases. CoreLogic research outlined from the beginning of last year the stable nature of property as an asset, which historically has not seen the same volatility as shares and equities, mainly due to the illiquidity of the asset associated with long transaction times, high transactional costs and lengthy hold periods. All in all, the Canberra market was a standout in 2020, and well done to governments and people for navigating through what has been a very tough time. So what can we expect in 2021? Well, as of November last year, the housing market reflected a recovery trend, with all capital cities bar Melbourne seeing some really strong increases. An increase in Australian property values during negative economic shock has been seen before. Values rose during the dot-com bubble burst and also the Asian financial crisis. Even during the 90s recession, the national peak to trough decline in housing values was only about 4.5%. This more than likely can be attributed to the low interest rate environment that we're currently in. The RBA, Reserve Bank, estimates a 1% reduction in rates can lead to an 8% increase in values, where the reduction is expected to be sustained for 3 years. Our Governor of the Reserve Bank, Philip Lowe, has signalled the current cash rate may be held at these levels for several years to come. This will be a significant tailwind for property values and will more than likely place upward pressure on prices during 2021. Overall, 2020 highlights the remarkable resilience of the property market performance, and also the shift in demand in inner city markets to lifestyle regions. On the back of the November cash rate being reduced, it is expected that this momentum will continue into 2021. Well, that's it for this market wrap. I wish you and your families a very healthy and happy 2021, and I look forward to helping throughout the year if needed. Thanks for watching, and bye for now.